Good afternoon, everyone, and welcome to the stock market today. It's Allie Coram and Justin Nielsen here with a breakdown of the action in today's session, Friday, August 23rd, where we saw stocks rally after Fed Chair Jerome Powell strongly signaled that those interest rate cuts are finally coming, Justin.
Yeah, and to be fair, the market was out actually kind of rallying before that. It just was
It
like,
was.
yeah, so we were doing pretty okay before that happened. It was just like I think everyone was happy to see that Powell didn't derail anything.
Yeah.
And as you mentioned, he had some good quotable sound bites, that we can get into in a little bit. But there's also some stocks that are also looking interesting. So we're going to revisit Cava that you and Mike Webster went over on this show just a couple weeks ago.
Mhm.
Phenomenal earnings move there. We're also going to talk about Goldman Sachs as some of the investment banks and more financials are setting up. And then we'll end with Royal Caribbean.
All right. And then we'll really end with a look
Yes.
at some historical precedents. And we also have some ETFs that we want to cover as well to add some additional color. So let's get right to it. So, first, the NASDAQ up 1.5% by session's close. The S&P 500 up almost 1.2% on the day. Looks like it got pretty close right around that high from Thursday where we had the downside reversal. We can talk a little bit about that as well. The Dow today also up about 1.1% or so. And with the focus on interest rate cuts, small caps outperforming today. The Russell 2000 up 3.1% here, Justin. So let's start there. Small caps.
Well, you'll remember that July 11th, not that long ago, is where things got a little topsy-turvy with the Russell 2000. A CPI report came out, and it was kind of like, "Oh, Mag 7, we're not into you anymore. We've got a new squeeze." And it was all about the Russell 2000, financials, XLRE, XHB, all of that. But that didn't last, right? We had a pretty brutal 3 days that took away, and let's make no mistake, you got to look at some of those days that we had on the upside. 3% days, multiple of them,
Mhm.
and then all wiped out within 3 days. So I don't know, power of three, I don't know what it is. But yeah, so here we have another 3% day getting back above that 2200 level. It's tough on this one. It's really volatile. It hasn't done much for a while. So there's a lot of people saying, well, isn't it due? Maybe. But you can say it's due for a long time. I mean, Scott St. Clair has shared on the IBD Live show a number of times how he's been saying that about international
Right.
stocks for a while and emerging markets. So, right now, I think I'm kind of sticking a little bit more towards just the regular growth and things with better relative strength lines.
Right. Yeah. Higher highs, higher lows. That's what we want to see. But this volatility here makes it hard to play. But again, it's just a signal of what we're seeing on the interest rate front. So if we can continue to see small caps participate on the upside, that seems like it strengthens the bull case's longevity, right?
I
Even if
agree with
we
you.
play other places.
Absolutely. I agree with you there, Allie. I really think that for a long time, we either had one area going and the other one was really poor. And, it was that whole sense of the oars weren't all going in the same direction, or some oars were actually like just in the water, and acting as a drag. So I think with more of the indexes showing strength, it just does, as you said, it kind of gives you that sense that there could be more longevity here as everyone's kind of paddling in the same direction.
All right, well, we'll have to see if I can keep it up. Let's go over to the NASDAQ, the tech heavy index here. Like we said, up 1.5% on the day. We got a pretty big downside reversal in Thursday's session, perhaps some profit taking ahead of Powell's speech. Also, not to mention, we've just seen such a strong run up without any sort of shakeout. Not all too surprising to finally get that right ahead of some potential market moving words that we did get from Powell. So a nice move up today, still an inside day. There's things to like about where we are, and still, of course, as always, some hurdles to clear, Justin.
Yeah, I agree with you there as well, Ali. I mean, it's one of those things where, given how much we had come up and how rapidly, um, a down day wasn't unexpected. Now, for those of you that are familiar with our market school rules, the reason why this was not called a downside reversal was simply because it wasn't at a 13-week high. So it's kind of too early in this rally to call it with that particular sell signal, but it did come below the 50-day moving average line. But I'm looking at this as kind of a solid test. Today, even though it was an inside day, the low cleared that 50-day moving average line. So I think it kind of reverses the action of yesterday. It was our first distribution day, since the rally got its follow through day. So look, they're not going to go up every day. And I think this was a successful test of that 50-day moving average line. So I'm kind of liking it. Also, just to kind of put in the perspective, S&P 500, it's kind of triggered some of these buy signals a little bit earlier. Not even close to the 50-day moving average line. I mean, that's just still didn't even come down to the 10-day. So that one is looking certainly, a little bit stronger in that sense. And that again speaks to how this is not just a rally of the Mag 7 this time around. In fact, let's go ahead and take a look at RSP.
Yeah, that's
You knew where I was
exactly
going.
where. Yep.
So
Nice
RSP
here
was
for the
only
equal
down
weight.
0.2%. I mean, it was like nothing. It was like a non-event. And this one is right there at new high territory, just kind of shaking it all off. So the RSP, of course, is the equal weighted ETF for the S&P 500, which kind of does take away some of that extra heavyweight of the Magnificent Seven, the glorified 10, the fabulous 5, whatever you want to call them, those big cap index, those big cap stocks that are $1 trillion stocks that really hold a lot of sway over how the indexes perform.
Let's also compare QQQ and QQEW. Speaking of mega cap tech, so here's a look at QQQ. This tracks the Nasdaq 100, closing today up 1.1%. Also an inside day here, so we'll keep an eye on that Thursday high on the Nasdaq Composite 18,000, also right around that level. Another key technical mark we're focused on the upside. So QQQ up 1.1% today. Let's look at QQEW, the equal weight, basically the same here. So holding up nicely.
Yeah, but let's go ahead and just kind of throw into the mix FNGS, which is kind of your FANG
Even
stocks,
more,
those
yeah.
top 10. That broke below the 50-day moving average line, didn't hold as well. And, this is still kind of struggling around that line. And look, not every Mag 7 stock is created equal. You certainly
Right.
have Amazon and Google that are looking a little bit, rougher. Those are below their 50-day moving average lines. Whereas you have, Apple and Meta that are looking much stronger, trending above their 50-day moving average lines. Nvidia, that got back above its moving average line. So the FNGS is kind of a mixed bag right now. You have some of those stocks that are really looking, okay. Some of them that are looking a little bit weaker right now. So that's kind of sending you a mixed message. But again, RSP and QQEW, or mostly RSP, is kind of showing you that overall things are okay.
Yeah. And we've been wanting to see
Yes.
RSP taking the lead for so long. It was so concentrated with the mega cap tech. So this is actually kind of nice to see. And I know that there are some market experts out there and talking heads, some who align somewhat with our style or our approach, who have said, hey, if you really do start seeing these rate cuts become a reality, keep an eye out for that rotation into your smaller cap stocks, into your sort of that non-tech areas. So it seems like maybe that's what we're seeing, while some of the mega cap leadership holds up, while others are not doing so well, as you pointed out.
Yeah. And, we should take a look at 0TNX. That's the 10-year treasury yield. I mean, look, this has been a pretty nice downtrend. I mean, even if you wanted to consider from May, when, or even, back earlier, I mean, we really have come off quite a bit in that 10-year treasury yield. So again, this is, the bond market has done some of the work for the Fed, and coming down that much, so yeah, you would have expected, at least I would have expected the Russell 2000 to do better earlier. given that, but yeah, it remains to be seen. And again, better late than never, as far as I'm concerned. So welcome to
Yeah.
the party, Russell.
Yeah, well, one area that we also talk about quite a bit whenever you talk about the interest rate cuts is the home builder group. And this definitely was on fire today. XHB, the ETF here for the home builders, up 4.3%. So definitely a day of outperformance here.
And look at how XHB really started outperforming, back in November. I mean, this was one that we were talking about for the November 1st follow through day, how
Mhm.
XHB was looking really strong. It had that big power rally, went sideways for a little bit, rallied again, formed a double bottom, and now it's coming out of that area. So again, this is very different from what the Russell 2000, both you would expect benefiting from lower interest rates, and the 10-year yield certainly a little bit more influential on that 30-year mortgage rate, but it's interesting that this has looked a lot better.
It really
And like you
has.
said, powerful day to day.
Yes. I know the only concern though was you had this sharp break and a weak rally, but it doesn't look so weak anymore.
Well, and also, I mean, when you consider that, again, just outside of XHB, when you go and dig into, okay, who's in there, there were definitely some stocks that were standouts.
Mhm.
I have a position myself in DHI.
Yes.
So that
You're
one,
great about pointing that out to us. That
yeah,
one really
I
stood
feel
out.
like that one was just holding the 21-day moving average line, whereas XHB was still
Mhm.
struggling around the 50. But
Mhm.
and this is not alone. I mean, you've got Pulte Home, which is on Swing Trader. I'm not Swing Trader, leaderboard. That was holding, pretty well at the 200-day moving average line. Toll Brothers, that's at highs already. Lennar, that's at new highs. So there's a lot of these stocks, in this group that are doing well. And I think for showing lows, it's worth mentioning that FP is not just the home builders, but also some of the things that are attached there as well.
Mhm. And Justin, your internet's breaking up just a little bit,
Yeah.
but we're gonna turn to XBI. This is the biotech ETF, seeing that relative strength hold up here as it continues to bounce as well. I had a great week this week, up 3.8% on the week. We also want to take a look at a couple of other sector ETFs here. Here's a look at SMH, the semis have bounced back from that August 5th low, but right at a key level, hitting a little bit of resistance at the 50-day line. Justin, your thoughts?
Here again, I think they're not all created equal, right? So SMH, just kind of coming back up to that 50-day moving average line. Meanwhile, you have Nvidia, which I think you and I both have a position in that. You
Mhm.
have Broadcom, AVGO. That one is already above its 50-day moving average line. This is on a Swing Trader as well. So and TSM, which is a big bellwether,
Mhm.
Taiwan Semiconductor, that is around its 50-day moving average line. But look, you have some things that are dragging this down. I mean, Intel, INTC. Someone was asking about this on the show the other day. Noting some strength, but I'm like, there's way too much weakness here to even see the strength. So there are some of those that do drag these ETFs down, and that's always the hindrance with ETFs, is that you are going to water down your results. You have that diversification, which is nice, especially for something like an XBI, where you've got, if you think earnings reports are rough,
Right.
try clinical trials and FDA approvals that happen with a lot of these biotechs, regularly. So yeah, it can be nice to have those ETFs for that extra diversification, but you got to know that sometimes it's better to just have the leaders in that group.
Very well said. Okay, and then let's take a look at IGV. This is the software sector, up 3 weeks in a row now at this point, up 1% this week. Let's also take a look at the sector spider ETFs. I have these sorted by percent change today, just so we can take a look at that. But also, as we like to do every week, we like to focus on that relative strength line as well. So I'll just go through these rapid fire real quick, Justin, and get your thoughts. Here's XLRE leading today.
Yeah, who would think that this would be the one, with the NASDAQ up as much as it was, that this was actually the leading sector. So relative strength, look, it took a little bit of a dive, but it's coming back strongly above its moving average line. I think this is still got to be on your radar.
And here's XLY, consumer discretionary.
So this has the Tesla and Amazon are the two big components here, but I like that it looks a lot like the NASDAQ. How it just kind of came down to the 50, didn't quite touch it. I'd be looking at that kind of middle of the W, see if we can get above that. And right now, the relative strength is just on the verge of getting up above its longer term moving average.
Here's XLK, the tech sector, right at the 50-day.
Kind of the same thing, and NVIDIA is helping this a little bit, but it does have a little bit more work to do for that relative strength, but it's seems like it's going in the right direction. This is just a little pullback on that relative strength after a really strong week to start.
Yes. XLE Energy, Justin.
Yeah, a little bit of a mixed bag. This is still in a downtrend on that relative strength line, so I'm passing on this for now.
XLB Materials.
Some green shoots possibly, a little bit too early to say though.
Okay. Let's go. There's RSP, which we already looked at, and SPY, for comparison, so we can see what these sectors are looking like versus the bogey there. Here's XLI Industrials.
Impressive that this is already at new high ground. The relative strength, it's kind of getting back above those moving average lines. So after that, big strength that it had after July 11th CPI, okay, it was okay that it took a little pullback. I like that it held tight. So I'm not counting this one out.
Okay. XLF, the financials. We're going to be taking a look at a financial today.
Yeah, so this is looking pretty good to me. Let's not get confused that because we've got some moving average lines that are kind of all all there together, and that 200-day, which is unrelated to the relative strength line, is in there too. Thank you for kind of highlighting it. So it is above its relative strength moving averages. The 200-day is not relevant for this relative strength line, so it's the moving averages that it's above. That's what I'm keying off of and making me like this right now.
Okay. And then here's communication services. So Meta is in here.
Yeah, Meta and Alphabet. So again, one of those things where it's a mixed bag, right? Alphabet not looking so great, Meta holding up well. So that's making this as an ETF, I think, giving a mixed message as well. I like that it's come up to that old high. Handling out here would be great, but I want to see that relative strength get some more power above those moving average lines.
And let's see, are we at the end of our list? Nope.
Yeah,
we've got healthcare, of course. How could we forget?
Yeah. So again, based on where this is with its moving average lines, I think you can ignore the healthcare sector. XBI is one way if you want to get a little bit more focused, but this is looking really strong. And again, when something's at new highs already, go to the weekly on this real quick, because it's worth mentioning that we've brought this up, that it hasn't done much for a while, but it really does seem like it's kind of getting some legs now. So certainly worth keeping an eye on.
Okay, and then XLU, the utilities. We'll check back in on that.
Yeah, another one of these that really had a strong move after that July 11th, kind of turn. And even the downtrend in the relative strength, it's still holding there at its moving average line. So I'm not, as much as I'm not feeling like I need to be in defensive stocks right now, XLU does have that kind of AI adjacent play with just the power grid and how much power these AI chips take, 7 times what a normal chip takes. And not to mention, data centers, all of the things that are going to need, more utility involvement.
Absolutely. Okay. Consumer staples here, Justin.
This was one where, again, it seemed like a lot of folks were prepared to hide here, and that was sending it to new highs in terms of price. But the relative strength, I think, it had a nice pop. We'll see if it can just continue that relative strength. And I think this is where we're going to let the market tell us at this point. I think that it's still that jockeying for position because we're in the early stage. So it might require a little bit of time for us to truly see which of these sectors is going to take center stage.
Yeah. Okay, well, that concludes our sector ETF review. Thank you for that, Justin. Okay, let's go to Cava, which you mentioned. I own this, and I think that we wanted to point it out, not just because it was a great earnings mover today, up 20% on some pretty fantastic growth here, Justin, on both the top and bottom lines, but also because this is one that Webby and I highlighted 2 weeks ago when it got back above its 50-day line, a buying opportunity there. The RS line hit a new high as well. So that's a setup that I really love. And I think getting in there allowed traders to build enough of a cushion heading into the report. And it went our way today and paid off.
Yeah, I don't really have much to add to that, Allie. I think you did a great job. So I actually wrote an article on this. Typically on Swing Trader, we don't hold through earnings, and we did on this one. A couple reasons. First of all, that entry, same day,
Mhm.
August 9th. Now it was a little bit tricky because we were ahead of the follow through day.
Right.
So that did make it a little bit trickier. And so we did end up going down to a quarter position.
Mhm.
But we had over a 16% cushion, 16% profit heading into earnings. And this is where sometimes it's useful to check out the options market.
Mhm.
If you looked at the options market yesterday, the 102, it closed, I think, at 101.98. The 102 strike for the calls was at about 570 by 670. The puts were at 550 by 650. That kind of gives you a sense that the market was expecting roughly a 10% range for this,
Mhm.
and so that's the expectation, right? So
Mhm.
you have to be kind of like, okay, you don't know the direction. You have to be willing to say, okay, it might go against me, at least 10%. Now, that's what the odds are kind of saying. You have to know it can go more. And that's exactly what it did. Luckily, it was in a favorable way.
Right.
I think there was something in the earnings report about how their what was it? The grilled steak was doing a lot better than they expected. They've raised their guidance on how many stores they're going to be opening slightly on their earnings. So a positive look all around. So what allowed us on Swing Trader to hold this, and something to learn for everyone out there, when you get a good entry, when you've
Mhm.
got cushion going into it, and as long as your position size is to a point where, based on that market maker move of the options market, that you think you can withstand that whatever X% drop on the downside, then I think you can make a calculated risk here based on what that could do to your portfolio. So for us, a 10% drop would have only really been about a 0.25% hit to the portfolio. That's something we can withstand. So that
Mhm.
was what allowed us to hold on to this. I did have a position, but since I wrote the article this week, I couldn't hold that position. I had to sell it, much to my wife's dismay. And so I'll be looking to get back into this. Hopefully, if it can just tighten up here, hold this gain, I'm going to be looking to get my position back.
Right, because that'll be the tell from here now, right? Can the
Exactly.
strength continue? So that's really what we
And
want
let's
to
go
see.
ahead and just end on the weekly chart note, because it's worth remembering that this is a recent issue. And if you want to look at, other restaurants, I mean, you can use Chipotle, because they do call this the Mediterranean Chipotle,
Mhm,
as just an example of what that expansion phase can look like. If you put
mhm,
this on the monthly chart, you can kind of get a sense, how, when it had just a few restaurants, and then it was turning into something that you saw pretty much everywhere you go. Now, it's not to say that Cava is going to be able to do the same thing, but they don't have to even get half as good to really be very
mhm.
beneficial for the stock.
Yeah, still in the early stages, it seems, and now above that century mark of $100 a share. And look at all these blue volume spikes. It's got the triple digit growth. So this is a leader in the IBD methodology perspective, checking off a lot of the boxes, not just the technical action. You've got the fundamentals, you've got the story, and the market is in our favor right
Yes.
now. So,
Yeah. So especially again with that early entry on the
mhm.
9th, when the fall through day happened on the 13th, I think that was another reason to kind of give this one the benefit of the doubt.
Right. Yeah. Well, one of the things that we've learned, because we love studying market history, is that some of the leaders in the cycle will present that buying opportunity and will have that RS line at new highs before the follow through day occurs. So again, the risk paid off here.
Yeah.
So good job, swing trader team. Okay, let's go to GS Goldman Sachs, Justin.
Yeah, so this, I like when a stock has a strong move and then it kind of consolidates, doesn't give much away. So this is something that we did put on Swing Trader today. It's right there. Forget the century mark. Let's go with the half millennial mark at 500. So a nice move here. I would have liked to see a little bit more on the volume side, but whereas you have a lot of things that we were looking at, oh, can it close above the Thursday downside reversal, yesterday's downside reversal, this cleared kind of the highs for the week. So a very powerful move here. And look, financials, as we showed, looking pretty good. You didn't, this isn't alone. You also have like JP Morgan on the investment bank side that's looking strong. So it's not alone. You've got other members of the group that are also looking strong. A number of regional banks looking at KRE. Some of those regional banks we've been noting have been a lot stronger looking, especially on the industry group spreadsheet that we go over every Monday on IBD Live. So I think that there's a lot to be said for the financials, and Goldman Sachs, I think, was one of the better looking ones today.
Okay. And once again, there is a look at GS for everyone above that round number of 500 now. Okay, let's take a look at RCL to cap things off with our individual stock session. Interesting setup here, Justin.
Kind of similar, right? Kind of looking a little bit like that Goldman Sachs. What I like here, especially though, is it kind of had multiple tests of this this area that it just cleared. So right above 160, you can see how it kind of had a high there as it was coming down. It came up above its 50-day moving average line, got turned away at that 21-day line. This was a little bit to the left. Yep, right there. Yeah, and then to the right, it tested that area again as it got right there. And then it kind of just seemed like it kept on testing that area. So multiple tests, and today it broke through. So that's an interesting look. Relative strength line getting above its moving average lines, a little tick up there. So this is one that I've traded a number of times. I don't have a position in it right now, but this was certainly one I was watching today, looking pretty strong.
Yes. Okay, one for the list. Next, we want to talk about history. And market history, that is. So we'll go to the current NASDAQ first in terms of how investors should be positioned right now. What should be the big takeaway for where we're at in this market?
Well, I think number one, we've got to respect the fact that not only did we get a follow through day, but we got multiple. So on the 13th, we got a follow through day, took a little pause. Then on the 15th, we got another follow through day. So we call those subsequent follow through days. Then we took a little pause, and then on Monday, we got another follow through day. So when you kind of see that kind of power coming out, it's something that is definitely noteworthy. In fact, if you go back to November, not that long ago, that November 1st follow through day was, rapidly followed by another. And I looked in my database and I looked for like the last few. If you could get a lot of those subsequent follow through days in the first 10 days of your follow through day. And so, as I was looking at them, this was one that on the 14th of 2023, you had, again, that kind of multiple follow through days. You had, it getting back above the 50-day moving average line. So when you have that kind of strength at the start, it's usually something that can propel it forward for longer. Let's go ahead and go to another one. We're going to skip down to 2023. If we go to June of 2023, you could go to August 2023, actually.
Okay.
Make it easy.
All right. Oh,
either
okay.
way.
We'll keep it. There we go.
Yeah. So let's go ahead and the follow through day was a little interesting on this one. It was on the 6th of January. And kind of low down there, right? This was after quite an ugly bear market where we had a lot of destruction, especially in growth. ARC K is kind of the poster child of how bad this was and how it really kind of started in February of 2021. But going back to the NASDAQ during this period, so in January, you did have this strong number of follow-through days. You were still below that 200-day moving average line. And so it was kind of, I think, good that we ended up correcting. Now, granted, I think part of what, if I remember correctly, this was the Silicon Valley Bank, if I'm not mistaken, that was affecting this in March.
Yeah.
But that kind of gave us that pullback to the 200-day moving average line. And then it was kind of off to the races as we kind of came out of that base. So a little bit different position there. And I think it's worth noting that when things are below the 200-day moving average line, you have to be a lot more careful. In fact, let's go ahead and do that. Let's go ahead and just go back to 1/5/2023, or 1/23 if it makes it easier, either way. And I'm going to point out some of these periods. Let's look at 2/15/2022. So this was an area where we did have, we had multiple follow-through days, but the follow-through days were starting to happen lower than the previous follow-through days. Okay, so that's not something you want to see. Not only that, but the position was very awkward, and it was below the 200-day moving average line. That 50-day line was about to cross the 200-day line, and all throughout, you did have, and this is something that's very typical of bear markets, you can have multiple follow-through days along the way, but you have to be aware that the position, sometimes you get this extra volatility during the bear market. You have these rallies that are very powerful, but just don't have staying power. So you have to be very aware when that happens. So not only did you have that happen on March 15th, you also had it happen April 19th, July 20th. In all of these cases, that was your follow-through day followed by 3 subsequent follow-through days. So a lot of power, but not sustainable. And again, be very wary when you start seeing follow-through days happen at lower levels. That's a big tell that things might not be all right. And then finally, in November 15th, 2022, this actually had 5 follow-through, or a follow-through day and 4 subsequent follow-through days in rapid fire. But again, that just got us above the 50-day moving average line, and we couldn't make progress to the 200-day until that January 6th one. Let's go just back one more. Let's go to August 2020.
Sure.
And April, guess what? We had multiple follow-through days coming out of there. And this was putting us above that 200-day moving average line. Of course, this was COVID. There were a lot of other factors. So don't forget that, we're not just saying this is the one all be all signal, but this is an example, a recent example. And on the plus side, with these examples that are above the 200-day moving average line, we could also go back to 2003 and 2009 as examples of this working out with multiple follow-through days early in the rally. But both of those also had examples just prior in their bear markets underneath the 200-day moving average line where you got the same thing and those rolled over. So I think the lesson here is that the power with us above the 200-day moving average line, above the 50-day moving average line, above the 21-day moving average line is very different. And having this rally start with these many follow-through days, back to back to back, I think is a good sign. It doesn't mean it's a guarantee. Right. Nothing is, but it's a good sign, and it does put the odds more in your favor.
Yeah. Above rising moving averages. Now we just have to get the 21-day line above the 50-day on the NASDAQ. But I will say the S&P, that it looks like that happened. There's, if you could get your magnifying glass, I'm seeing the little green line there above the red. So we're starting to get those moving averages stacked in the right order. And that's, these trending markets are really when you can make some good progress in your portfolio.
Yeah. And as a reminder for folks that, are on Power Trend Watch 2024, what we look for in market school rules is, not only can we get that 21-day moving average line above the 50-day moving average line, which again, the S&P 500 did today. Yeah. We want to make sure that, what's that?
I was like, that's step one.
Step one, right? Exactly. Step 2, stay there. Okay. So it has to be staying up there for 5 days. Step 3 is we want to have that 21-day moving average line. We want to have the index trending above that for at least 10 days. So again, now we just start counting. For the S&P 500, this is day 1. Once we hit day 5, if we can stay above the 21-day line, if that 21 can stay above the 50 and that 50 stays in an uptrend, then power trend as possibly as early as next Friday. So something you might have a chance to talk with Webby about on the next SMT extended version.
We'll have to see. Don't jinx us. We've got NVIDIA earnings to get through.
True.
I'm just kidding. No. I'm just kidding. But so that's a good segue in terms of what should investors do this weekend to prepare for the week ahead. So it seems like exposure, people should be pretty invested, pretty deep in the market, not necessarily fully invested or on margin here, but, a healthy position in terms of how many stocks you're in or what position size you're going with, whether it's 60 to 80% invested, maybe a little bit more than that, Justin. But we've got NVIDIA earnings next week. So anything AI related, you need to be thinking about whether it's a stock that you own or just the broader ripple effect that we could see across the market for better or worse.
Right.
We don't know yet.
And I think this is where it's still a chance to be looking at those relative strength lines. There's a lot more stocks that, as we said, are rowing in the right direction. Now it's a matter of you got to choose, right? And that's sometimes hard. People want kind of a little bit of everything. And if you do that, you are going to water down your results, because if you do get one of those big winners like a Cava, it's not going to have as much of an impact in your portfolio. But if you have a lot of winners, that might be okay, because again, you're diversified. So it really kind of does depend on your style. But this is also where discipline comes in. You have to be very careful of not buying extended. Certainly given that big move we had last week, you wanted to, kind of make sure that you were being very careful with your setups and not just buying things that were sticking way out of there, because, not that it's, that they won't work, but it's harder to determine, okay, where is my exit?
It just raises the odds that you could get shaken out in a normal pullback.
Exactly. And so, and that can be frustrating when you have the right stock, wrong time, you get shaken out of something just to see it go up without you. A lot of people find it hard to buy that back, but sometimes that's what you need to do. Sometimes, I think a lot of us on IBD Live have shared that we had to buy something multiple times, and it was the third time that it finally worked. And if you hadn't gone for it that third time saying, oh, I've been burned too many times by this one, then you could have missed out on some good profits. So I think really pay attention to those relative strength lines. We've got a weekend ahead of you, and not to give you homework, but this is, I think, a great time to be, freshening up your watch list, making sure you're looking at your own portfolio, because at least for me, I'm to a point, I use cash accounts, and Scott Sinclair kind of said this today as well on IBD Live. I'm getting to the point where if I'm going to buy something, it means I have to sell something. So that's where you start doing the grading system. Webby talks about this a lot. What are your A stocks? What are your B stocks? What are your C stocks? And if you want to add something, the first thing to go is probably going to be your C stocks. So, do that grading of your own portfolio, do the look at the stocks that you wish you owned, and really start identifying levels at which you can be buying them with a reasonable amount of risk.
Exactly. Yeah, because one could imagine if we trade around this range that the NASDAQ has been trading in, I think Thursday's high and low, those are good levels on the upside and downside to keep an eye on, because they line up with 18,000 on the upside, the 50-day line on the downside. And then, if in a couple of days we can get above 18,000, who knows? It could happen Monday. It could not happen for a long time. We don't know. But if we do get a bullish scenario next week in reaction to NVIDIA earnings, I think traders should be looking for stocks to potentially add to their portfolios, and using those strategies that you mentioned, Justin, making sure that you are in the leaders and not in the laggards of this cycle. And I also have a little homework to add. So
No,
I've
doesn't
I've
want to be left out, huh?
yeah, I've added to my favorites the IBD Live Ready List and Watch List, which are available in Market Surge. So the easiest way to
For IBD
find
Live
them,
subscribers, right?
yeah, for IBD Live subscribers here. So here's a little sneak peek for people, but I like adding it to my favorites. And then what I like to do during the trading day, sometimes if I want like a super quick list, of course I'll go to the ready list, but I also like going to the watch list. And if I'm looking for stocks during the day in terms of just like, okay, what's moving? What do I need to be focused on? What's showing the strength? Just sort it by price, and then you can see, especially on a strong up day, what is outperforming, and from there, okay, is it forming a buy point? Is it actionable? Is it carving the right side of the base? That kind of thing. So you can take a look at the IBD Live watch list. And I also like the RS Line Blue Dot list in conjunction with looking at stocks that are close to their major moving averages.
Mm-hmm. Well, and kind of to that point, if you bring up the IBD Live watch list, this is something that Webby was very happy to announce because he goes through literally thousands of charts, just thousands. And so when he's going through and trying to identify things very quickly, it's a good idea to flag them. If you're just going through things quickly, there's that little flag by the name. And if you flag it, it kind of lets you know, hey, this is something that I want to go back to a little bit later. It caught my eye for some reason. And then if you can just flag a few of these, it can really kind of make your workflow go quicker. You can get through a lot of charts very quickly. So one of the things that just got added was if you hit F5, you can be going through charts. Webby says, he likes to do the play. So it'll automatically forward to the next chart. Or if you like doing it manually, you can use the space bar. But either way, it lets you get through a lot of charts. And if something's, really catches your eye, you just hit F5. You just kind of verify that the flag goes on the right one, because sometimes if it's moving to the next one, if you're on play, it can end up costing you time. So you want to get your rhythm right. But once you do, it can really improve your workflow, let you get through a lot of stocks. And I like that you brought this up, Allie, because you are often hosting things live while the market is going. You have to kind of know what makes sense to look at, and this just makes it easy for you. You start with a good list, and then you do a sort, and it just puts the things that are most important. And you could do a price percentage change, you could do a relative strength, you could do a volume percent change. I like to put in a daily closing range. I have one of my columns that'll have the daily closing range. So that'll tell me, oh, these are the things that are high in their range today. And so there's a lot of different ways you can do that. And remember, you're going to see the same stocks appear over and over and over. And it's like they're hitting you on the head. Look at me, look at me, look at me. So that gives you a good sense too, where your attention should be focused.
Yeah. Webby and we did do a closing range screen a couple of weeks or maybe even months ago at this point. For the audience.
Time gets all warped.
I know. So
yeah, that's a great idea. I basically run that. I have a column. And so with my normal screens, a lot of times I have that column that I'll do the sort by. And this is, again, it's personalized. Everyone kind of has their favorite thing to look at. You can certainly use some of the things that we are talking about. But you might find that you have your own thing that you like to gravitate towards and that works for you. And no hard feelings if you use your own thing. So that's great.
Exactly. Yep. And then when you set a flag, hitting that F5 button, say I want it on a KBH or say I want it on DoorDash, then you can, go back and sort by your flags. And there's other ways to have flag lists or folders, that kind of thing too. So.
Well, in fact, what I have on my favorites, in addition to the IBD Live watch list and IBD Live ready list, I also have the growth, the market surge growth 250, and I have flagged symbols. There's a list that you can have of your flagged symbols. I'll go to that in my favorites. And so I know, okay, these are the ones that caught my eye for one reason or another. And I'll just go through those and make sure I haven't missed anything.
Yep. Good stuff. All right. Yeah, it's really endless the ways that you can sort through all these different lists to find good stock ideas. So,
And this is why if you are new to market surge, I highly recommend getting a coaching session because there is a lot that you can really personalize with this. So if you tell the
mhm.
coach, "Hey, this is what I'm looking for," they can steer you. This is where to find it, and it just saves you a lot of time. I mean, sometimes I like, poking around and just stumbling on things, but that's not always feasible. If you don't have a lot of time, get a coaching session if you
Yeah.
just started out with market surge. Let them steer you in the right direction and guide you to where you need to look.
Yep. Well said. All right, Justin. Well, thank you for joining me today. And thanks to everyone for tuning in. That is it from us for this week, but we'll be back with more starting Monday morning on IBD Live, investors.com/IBD Live for all the details on that. We'll see you there. And then we'll also see you on Monday after the close right back here.